Hey everybody, I'm Val.
And I'm Mo.
And I am Cody Reid.
All right, we're very excited to have our dear friend Cody here today. Cody, can you tell us who you are, what you do, and why you're actually sitting in front of us?
Thank you guys for having me in the house. I appreciate it. So my name's Cody Reid. I'm with Pilgrim Mortgage. Been around for about almost 20 years now. I'll say since 2007. So I'm coming up on year 20 in the business. So been giving away money ever since then. Yeah,
It's a
expert
free
in
money.
yeah.
Okay.
Well, I always like to lead off the conversation with did Mo tell you I was giving away all the money?
I missed that memo actually.
Sorry, I took all the money.
So that's usually if I'm talking to a brand new home buyer, it's very much just kind of lightens the start of the conversation, because the last thing everybody wants to do is they're getting on the phone with me and they're anticipating having to pull credit immediately,
Mhm.
and I'm just like, let's take it down a notch and just talk about, like, most of them giving away the money. Yeah,
Okay.
and they're like, yeah, that sounds better. So
Yeah.
anyways, I have been giving away money for 20 years. So it's been a whole cycle of, we were talking about this earlier before we got started, doing stated income, no income loans. Back in the day, that was 2007, very different market. I will say the rates were probably pretty similar back then to what they are today, though, in the sixes and
In
the
2007?
sevens. Yeah.
Okay.
So even back then, people were still buying and selling houses, so it didn't matter what the rates were. They could do no money down a little bit back then, have 500 credit scores, no jobs, no income. A little
Sounds
shaky, a little
about now
dicey.
actually. Yeah.
Yeah, a little dicey, but
But you're still here.
still here. Yeah. So, and believe it or not, actually, there's still loans right now. You don't even need a job. Now, you
Mhm.
do have to actually put some money down, and you have to have
Yeah.
decent credit, moderate credit, but you can help and solve a problem today, actually. Um,
Okay. And who often has those type of loans?
I know we do. I know
Yeah.
when I talk to a lot of other lender friends at other places, there's not that many that have that option, actually. So I still call them my kind of ninja loans.
This would
Um,
be more for like entrepreneurs type, like that can't have validated income essentially.
that's exactly the
Yeah.
person I was solving a file for today. I mean, they were buying, and it's a $1.8 million house, self-employed person, and the documented income was, well, let's just say, a lot lower than what it needed to be to buy that kind of a house. But they
Yeah.
have a 20% down payment, and I said, hey, 12 months from now, we're going to get to here, and we will fix you, and we will refinance you into a regular permanent 30-year fixed loan. Do 20% down and get this no job, no income loan.
Hmm.
Problem solved. You buy a house and move on. So, anyways,
Magic.
yeah, it's all coming around full circle. So, yeah,
Yeah.
deals that make
Continuously giving
sense.
money.
Yeah,
Yeah,
still
yeah.
giving away money. Yeah.
Okay, so we always talk to our clients and tell them, did you get a pre-approval? That's the first step, right? Because I always tell them, you're either going to fall in love with a house you can't afford, or you're cutting yourself short, right? And you can afford a lot more.
Uh,
So tell us a little bit about the pre-approval process.
So, pre-approval process. So, I always like to tell people, like, first thing you want to do is, when you get on the phone with somebody like me, we're gonna have a good chat. It's 5 minutes, it's 15 minutes, depends on how much we're hanging out. Before I even walked in here, I was having the same conversation pulling into the parking lot, wrapping up a call, and I was like, "This is what you would call a pre-qualification. That means we've had a good chat,
Mm-hmm.
and based on everything you're telling me, we're going to be fine. You're going to buy a house, everything's going to happen, everything's go according to plan." Now, pre-approval, the difference is I'm going to get some paperwork, some pay stubs, some W-2s, some bank statements. We're going to double check everything, dot all the I's, cross all the T's, and when we go make the offer, we are certain we're buying a house. I'm going to actually get your loan through underwriting and approved, so that when you go make the offer, if there's 3 different people making an offer on that house, your loan is approved. It also helps speed up the timeline. So I
Mm-hmm.
know we were talking about this earlier when you were writing 3-week contracts. We can close a deal in 2 weeks or whatever it is. The reason is because we do that pre-approval and get all the paperwork up front.
Okay, you did all the bulk work. Yeah.
Yes. And so
Can you tell me like turnaround time? What does that look like in
um,
terms of a
it
pre-approval?
it could be same day, it could be next day, depends on what they have going on. For my self-employed client, it might be a little bit longer.
Yes.
I'll be the first one to tell them, like, hey, you've got about 5 different sets of tax returns, 100 pages each. I'm going to need a couple days. Just give me like 3 days. As long as you're setting that expectation, everybody understands. So, but the average buyer that's just making a regular W-2 salary,
Mhm.
and they're going to do 5% down, or just what I call kind of vanilla,
Yeah,
same day.
cookie cutter.
Yeah, if you call me at 4:30, I might say, give me everything tonight. I'll look at it in the morning, and you'll be approved tomorrow.
Yeah,
So
yeah.
piece of cake.
Those are the easier ones to deal with.
Yeah. Unless you call me and say, hey, Cody, emergency, I need this in like 30 minutes. Oh, great. We'll run to the front of the line and we'll just knock it out.
Yeah.
So
Yeah.
everybody's case is a little bit different. Some people might say, my lease is not up until 3 months from now. Yeah, no big deal. Give me everything tonight. I'll look at it in the
Yeah.
morning and you'll be approved.
We have people say, but I got a pre-qualification. Cool. I got a pre-qualification for, Sapphire, whatever, American Express, who knows what. And then if I call them, they're going to
Yeah.
say, well, maybe not quite what we put in the envelope.
Well, so the way it works at there's some bigger banks. I won't say any names or anything per se, right? But it's literally the buyer is approving themselves. They enter whatever
Mhm.
their income is, and they say, hey, I want to buy a $600,000 house and do $30,000 down, and approved. And then they will spit out a pre-approval letter right there on the spot. And so if there's anything variable income, commission, bonus, in their mind, they're making, all this money. But in the eyes of the lender, the underwriter, et cetera, we can only use a certain amount. And so that could be something that gives them trouble. Now, some people could be totally fine with that, but the self-employed borrower, the commission, the bonus, the overtime, any other variable like that
Well,
might cause a
plus the
problem.
credit score, because in the
Plus the credit score.
pre-qualification, you don't know the credit score, and
Correct. Yeah.
they can.
What do you think your credit score is? Will be the question.
And
Right.
it's quite different from what someone sees on on the credit card statement, how we can check our credit scores, and sometimes you might be in the 700s, but whenever we do an actual pull, we're actually around 620. Do you get that quite often on your end?
Actually, we do get that a lot. And so usually when I'm having the conversation, again, this is part of the pre-qualification initial, just kind of get to know everybody. We're having a friendly chat. We're not pulling credit. And I'll ask the question like, what do you think your scores are? And so a lot of times people are like, oh, maybe I'm 740. And I'm like, all right, are you seeing that on a credit card statement, like you said, or when you log in online? And I'll let everybody know, hey, that's going to be what you would call a consumer score. So when you're looking at your scores as a consumer, or whatever the credit card people are telling you, that's going to be one score. There's a different scoring model for each industry. So when a mortgage company pulls it, you're going to get one score. If you were to go apply for a car loan, you'll get a different set of scores. If you were to apply for a credit card, you'll get a different set of scores. So every industry is going to have a little different scoring model. No.
How do they compare?
More often than not, I find the mortgage scores are usually the meanest, toughest, lowest scores.
Okay.
More often than not, on average. Occasionally I'll be surprised and somebody said, oh, I've got a 680 score, and I'll pull it and I'm like, you're at like 720, like you're fine. Yeah.
That's a nice little Easter egg.
Yeah, it's
sometimes.
nice. Yeah, it happens the other way around. But sometimes I'll talk to people and they'll say, oh, I've got a 720, and I pull it and I'm like, oh, you're at 685. And so, and the only reason we care about the scores is every 20 points, depends on the loan program. For conventional, every 20 points really can impact your interest rate and then also your mortgage insurance, depending on if you're doing less than 20% down. FHA is not quite as picky, VA is not quite as picky, USDA is not quite as picky on the credit scores. So if you're at 680 or 700 or 660 or 740, probably going to be about the same. But conventional, very picky on the credit scores. So that's the reason we care about that.
Credit scores are a little bit different than your debt to income ratio allowance, correct? Yeah. What would you say is the more restrictive loan type when it comes to debt to income ratio?
The most restrictive is probably going to be USDA on debt to income ratio. And then, and these are all things where I try and tell everybody, like, lean on your loan, your lender, your loan officer. This is why they should be experts at knowing this. They should know all this off the top of their head, rattle everything off the list. So an FHA loan might be a 56.99 on a debt to income ratio. Very specific, right? And a good lender is going to know that because they've run 10,000 loans, no kidding, no less than 10,000. And that is the magic number. Right? Now, VA is going to be the most lenient. A VA loan, the most I've ever seen personally, 76, 77, somewhere in that debt to income ratio. And it's because the borrower had really great, they were 800 credit scores, they had money in the bank. they were going to sell a house, so they had still had an existing home.
Okay.
So they were trying to qualify for the next house and then sell the current house. So they just had a whole bunch of debt, and which is fine.
Mhm.
Approved. And so VA is the most lenient, hands down. USDA is probably going to be the pickiest. I always tell everybody USDA is kind of like a combination of conventional pickiness and FHA pickiness. Take all the pickiest parts from both programs, put it together, and that's USDA.
Okay.
I do like USDA though. I wish I could
Yes.
do more of them. It's no money down. The mortgage insurance is pretty cheap. It's cheaper than FHA.
I've seen that. Yes, definitely. And
Yeah.
it's kind of unusual comparing the two between FHA and USDA.
Yeah.
Yeah.
But if I could do more of them, I would. It's just you got to be further out of town, and then there's income limits, and there's no purchase price limit per se, but there are income limits for the number of people in the family. So like the more people in the family, the more income you're allowed to have.
So someone that has a high income with a bunch of kids can live out in the country in a nice home.
Basically, and do no money down.
Okay.
Yeah.
That's
And
a nice
so-
program.
Yeah. and then credit's okay and all that kind of stuff. So, but yeah, usually on USDA, you're going to want to have a 43% debt to income ratio or less. You might be able to get away with 45, but the front end ratio, the house payment divided by all the income has to be usually below 29%. So there's little, tricks and tips that you kind of learn over the years. Like what's going to make the computer program say yes is really what it is at the end of the day. So, whereas conventional, you can go all the way up to 49.99. Or even Freddie Mac, you might be able to get away with 50.4 because it'll round down to 50 on a debt to income ratio. So very, like you're talking decimals now.
Yeah.
So, and I'm big on the math piece. So I'm big on.
You don't
being
seem
very
analytical
exact.
at all.
Yeah.
Yeah.
Right.
Absolutely not.
Yeah.
No, my eyes aren't glazing over right now.
Yeah, so-
Mo is loving
It's-
this because
Yeah.
she's my Excel spreadsheet kind of
Yeah.
person. And I'm like, get me in front of them. Let me go clean some stuff. I'm
Yeah.
hands on. Yes.
Yeah.
But I definitely understand what you're talking about.
But this
We've
is
dealt
why
with
we
clients
team
from
up.
everywhere.
Yeah.
It is. Absolutely. I mean, I've met your wife.
Yeah.
And although she's very intelligent, she's a lot friendlier than you.
Yeah. I am very much just like, oh, let me just reverse engineer these numbers here, and I'll tell
Yeah,
you all the
yeah,
answers you need to know.
But I mean, being in our industries, we just deal with so many different personality types. There's some times where I'm like, maybe I'm not the right person for you. Mo, jump in.
Yeah, absolutely. So, okay, there's all these different kinds of loans. So if you get a first-time home buyer, how do you help them pick conventional or FSDA?
FHA or USDA
Sorry.
or it's okay. FSDA, yeah, it's all
A lot
right. It's
of
my
A's
job
in
to
there.
know all
There's a lot
the.
of A's.
Alphabet.
Yes.
It's my job to know all this stuff. So, so every client we have. It's a very. I hope this doesn't sound too boring, but I have the same conversation with like every client. Every day, I have the same conversation. Like I
So what
Put
you're saying
yourself
is
in
that
his
you're
place.
really good at it. Do you sing in the shower as well?
No.
No,
I'm trying not to make it sound like too boring or redundant, but
Yes.
I really actually like it because like there's always like these little intricacies that like there's every single person is like so unique and different.
Yeah.
Like there's no same client. I can have the same conversation, but like every client is different. And people are so unique. It's amazing. But I always reverse engineer. I have to come away with answers to 4 questions. So it's always, what do you want your payment to be? How much do you want to bring to closing? When do you want to close? And then I always try and answer the last question is maximum approval. Because a lot of people might say, I want no more than a $3,000 house payment, right?
Okay.
And I want to bring no more than $20,000 to closing. I'll say, oh, perfect. I can work with those metrics, reverse engineer it. I already know I'm going to be at like a $400,000 purchase price, and this is our number. We need to stay this number or less, and then we'll cover like money in, money out, debt to income ratios, job, all that stuff. I'm like, oh, we're actually approved for $600,000, but that number doesn't work with your $3,000 payment, right? The goals that you have, right? And so I want to make sure I get everybody on the same page and say, for what you want, it's this. What you're approved for is this.
I love that you operate like that because we're very similar.
Yeah.
That's exactly how we take our client intakes. We're always just discussing almost like a business plan, right? You're like, hey, what's our 5-year goals with this property? What does this mean to you? What are your visions for this? Is it we're going to stay here forever type home, or are we going to like need something bigger because we're going to pop out 5 kids? So we really just start having those discussions for them, or are we looking at it more like on an analytical standpoint in terms of like investment type property, and come up with a very similar conclusion to you. And then we connect them with the right lenders that make sense and kind of bridge everything together for us. Yeah.
I like that you guys take the bigger picture though too, because I mean it's really what we're doing is like we're all on the same team trying to help people build wealth. At the end of the day, like that's this real estate. I mean, yes, everybody has to live somewhere, but like at the end of the day, this is going to be their biggest wealth builder 5 years from now or 10 years from now, whatever that number is.
Yeah.
Like everybody's going to be coming out, paying down the mortgage, the value's going up. I mean, just, and I know you guys are do the math with all the clients as far as the appreciation rates and all that
Yeah.
kind of stuff.
Well,
Yeah.
and we're in an interesting market, right? Especially here in Austin, because
Mhm.
values went up by what 30% a few years
Yeah.
back, which is
Mhm.
insane.
Yeah.
And they pretty much plummeted. But people are so confused, like, well, but is it going to appraise, or it sold this much last year, or you have all these people who are upside down now because they're
Mhm.
trying to sell. So, I mean, I kind of, correct me if I'm wrong here, but I kind of generally think that if you're selling a house, you're losing about 8% of your sales price as a listing, as a seller, between the commissions,
Which you have to pay in
the
fees.
taxes, the
Yeah.
fees,
Mhm.
all the things, right?
Yeah.
So you're losing about 8%.
Mhm.
So in a stable market, homes went out by about 4% a year in value.
Yeah.
So you have to keep it for minimum 2 years just to break even,
Yeah, that's fair.
if not more. But right now we're still just kind of not really going up 4%. And
Yeah.
So we might be in a zone where we're flat, but like kind of what you made a comment about, like 1 year we went up 30%, right? And I don't know when that year's coming. Like none of us really do,
Yeah.
right?
Yeah.
And so it could be just, ho hum, flat, 2%, 2%, 4%, whatever it is, and then all of a sudden you get that
Yeah.
spike. And so again, and this is when I'm talking to clients too, I'm telling the same thing you guys are. You don't know when it's going to happen.
Mhm.
And so one, you have to live somewhere. Two, you want to have money invested in real estate somewhere,
Mhm.
right, for the bigger picture, because it's a long. At least you could do buy and fix and flips, but that's not.
I mean, that's not
Yeah,
like
that's
super
a that's
prevalent in
a
our market.
yeah, that's like
It's
No.
like a
that's a tougher game.
purchase, tear down, and then build back up.
Yeah.
I'm going to say that's the deep
Yeah.
end of the pool. I'd rather
Yes.
focus on just like the regular people that go to work and
Mm-hmm.
do a different job. They don't do it buying, fixing, flipping houses professionally. And so it's kind of like being in the stock market. You don't know which year, like you're putting your money in, and it could just be, but then all of a sudden it goes up.
Yep.
It might come back down a little, but it's still up overall, right?
Right.
And so you're in the game is kind of the point. And so, plus you're writing off mortgage interest every year. You're writing off property taxes up
Yeah.
to a
Tell us
point.
more about taxes.
Yeah, I know.
Yeah.
I know. I cover a lot of this stuff when I'm talking to clients. I don't know if you guys dive into all
No,
this.
these are definitely pros.
Yeah.
Yes.
And up to a certain point, you get to write off mortgage insurance if you do less than 20% down, up to a certain income level.
Mhm.
Points.
Yeah, you get to write off points if you're buying
Yes.
down the rate. And there's more kind of tricks these days, like we used to do back in 2009, 2010, 2011. All these back when the rates were 6, 7%, et cetera, where we do temporary buy downs, and we'd buy the interest rate down for 2 years, 1 year, 3 years,
Mhm.
et cetera. We had all kinds of stuff back then, and it was funny that it came full circle like these last couple of years. And I was like,
Yeah.
and it was like, oh yeah, do you do these buy downs? And I'm like, oh my gosh, we used to do these like 15 years ago.
Yeah.
Had to brush off the
20
old
years.
skill
Yeah,
set.
yeah. I'm just like, oh yeah, I forgot about these. And
I
so
mean, but there's a product for every market is kind of what we're getting at here, right?
there really is. Yeah. There's a solution
Mhm.
if you kind of know what the objection is. Like there is a solution of a financial way to
Mhm.
structure it. And so, I was talking to another client about this. I'm like, as long as we feel like we're getting a better deal today, he was making like a $600,000 kind of purchase price ballpark. And I was like, if we feel like we're getting basically, if we can save $10,000 today compared to the price 2 years from now, like, do you think 2 years from now the home is going to be worth more than $10,000, like 610
Mhm.
compared to 600 now? And he was like, yes. And I'm like, perfect. You answered your own. Like the numbers make sense as long as the home is worth more than 610
Mhm.
in 2 years. Then it makes sense to do it this way. Do the buy down, buy it now, as opposed to waiting to buy, right? Because over time, the home really will appreciate at 2%, 3%, 5%, plus or minus. Real estate will typically keep up with inflation, right? And so the big thing with housing, anywhere, and this can apply anywhere in the country, housing is always going to be tied to jobs, first and foremost, above anything else. So as long as there are jobs in whatever city you're in, if jobs are coming to that market or to that state, you should be buying real estate or owning real estate in whatever that market is. If people are leaving, I would not be buying real estate in that market, right? I'd be selling real estate in that market. And so at that point, as jobs come in, people come in, money comes in, the economy pushes up, all prices rise, et
Which is what
cetera.
happened in Austin a few
Which is
years
what
back,
happened in
right?
Austin. It exploded.
I mean,
and
right now we seem
everybody
to be having
gains.
it in so many of our suburbs right now.
Yeah.
Especially as you
Yeah.
go out more towards southeast Austin, north. I mean, it's kind of expanding all around the Austin market
Yeah.
currently.
But we had a massive tech boom a
Yeah.
few years ago. Just
Yeah.
every company moved to Texas.
But it's still coming. I mean, even just with the recent SpaceX stuff, the money will, it's already flowing into Texas, and
Mhm.
it'll spread, and it just kind
is.
of keeps trickling down.
And it's almost like a latent effect too, because a lot of these projects have been announced for several years at this point in time.
Oh yeah.
And there's new ones that have come up that are being announced as well. And as that comes forth, they start having all the hiring and people relocating, a lot of engineers, of course, which we love.
Mhm.
We love engineers.
Yeah.
Yeah.
Just good, high-paying, steady
Yeah.
jobs. Great income, not a lot of debt, great credit. Like, just talk about a perfect home buyer.
What about foreign buyers? We're seeing more and more of that.
We
Yeah.
are. Absolutely.
Yeah, I was going to say, and there's lots of foreign home buyer programs. So typically, though, you'll have a higher down payment requirement if you're a foreign buyer, but you can
Mhm.
buy them as investment properties. There's DSCR loans. DSCR stands for Debt Service Coverage Ratio, DSCR. So
You can do a cheer with it.
You get a
Yeah,
little,
I know.
little song. Do you
Yeah.
remember it?
Yeah. So I always like to, because there's so many acronyms, and like
I feel like you're just dancing around your office,
Yeah.
singing all the time.
Yeah.
And seeing
Yeah.
numbers everywhere.
I'm
Yeah.
huge on the number stuff. So like some of the stuff, I'm just like, I wish more people would geek out with me. So nobody, I don't know. I like to geek out on all the numbers. So that's what excites me. In reverse engineering and problem solving and like solving the tough files, like those are all the cool stuff. But yeah, there's stuff like there's so many cool non-QM programs, like non-qualified mortgage just means it's just not a Fannie Mae or Freddie Mac kind of standard product. So anything from DSCR, foreign national type stuff, investment properties. You can use assets as income now. So if I just show money in the bank, like that's your income divided by 50 months, 60 months, 72 months, whatever it is, depending on the program, the down payment, bank statement loans. Like I said, no job, no income loans. Like as long as you
That's pretty wild. Like no job, no income. But
Yeah.
I also understand there is a
pros
job,
and cons.
there is income,
Yeah.
but it's
Yeah,
just a little harder to prove.
On the deal.
Yeah.
So you're talking about programs. So can you break down a difference between different types of lenders? Because it does seem to be very tied into different kinds of programs.
Yeah. And so I am what you would call a correspondent lender. So I like to think of myself as in the middle, actually. So on the far kind of left side, left or right, I don't know which direction matters, but
Yeah.
you'd be what you would call like the retail bank. And so like if you were to walk into Chase Bank and say, oh, I bank here at Chase and I'd like to get a mortgage. That is what you would call a retail lender, or any bank, basically. They offer whatever Chase has, right?
Okay.
Now, I am on the other side. I'll come back to me at the end. On the other side is a broker, and so they can shop the different lenders from Chase to Rocket to UWM to PennyMac to all these. There's 100 different lenders out there, right? And figure out, okay, who's going to be the best rate, the best program, the best terms, all the stuff. And then I am in the middle, so I get to do. I get to shop all the different programs and options. But the difference between me and say like the broker is the broker pieces the buyer and the lender together. They're not the actual lender. They just
They're a
broker the
matchmaker.
deal. They're a matchmaker, right? And they say, hey buyer, give me all this paperwork. And then they say, okay, hey lender, here's all the paperwork. And they hand it over to them, right? Now it's the lender at that point that's underwriting the loan. It's not the broker that's underwriting the loan. It's not the broker that
Gotcha.
closes and funds the loan, right? Whereas in our position in the middle, the reason I chose the middle, and I've had the option I could be a broker, I could be retail, I could do any of that stuff. I choose to be in the middle because I want to have the ultimate control over the underwriter, the processor, the closer, the funder, like everything that is involved in buying a home. I just want to have everybody's under my thumb, and I can't let go of that control, because if you call me and say, hey, we need to close this one 2 weeks. Cody, can I call in a special favor? I'd be like, yes.
All right. So
Yeah.
I see why Mo and I like you so much. and
Yeah.
I think we're all kind of control freaks in different ways.
Yeah, basically, yeah.
for
Like
sure.
you have your things. Like I probably don't bore you guys with all this stuff, but I'm like, I hate saying it, like kind of super control freak on some of the timelines that are going on behind the scenes. That like I try and spare the clients, the realtors, like anybody from even knowing about it, but everybody in my office definitely knows about it.
Oh yeah, yeah. There's things about our jobs that no one will ever hear besides.
Yes,
behind the
exactly.
curtain.
Yes,
Yeah,
like don't look behind the curtain.
Our inner
over here.
circles.
Exactly.
Yes.
It's definitely behind the curtain, though. That's why I like
Yes.
to be like, I'll show you guys behind the curtain a little bit. If you
Yes.
really don't say it, don't tell anybody, and don't freak out.
Yeah.
But I'll let you see behind the curtain,
Yeah.
like how some of this is made.
Some
so.
crazy numbers all over the walls.
Yeah. Oh yeah.
I've been helping some new agents and they're like, why are you always writing these 21-day closings? What's with you and the 21-day closings? And I'm like, well, if you're going to beat the seller down on the price like it's nobody's business, I have to add some honey somewhere,
Yeah.
right?
Yeah.
So I always go for 21-day close or shorter if possible, because it's a big incentive for the seller to get their money faster, right? And you've always come through in that. What is the fastest you have closed alone?
10 days, yeah.
10 days.
Yeah.
Okay.
So yeah, it's
What kind of loan was this?
just regular conventional.
Definitely not VA.
No.
That's
no,
impossible.
I'll tell you, and the reason, and VA is still doable in 3 weeks. That's fine.
Okay.
But the main reason VA is tougher is because on a VA appraisal, like when we get the contract, we'll order it like day one. But we order a VA appraisal, and the VA appraiser, normally on appraisals, I control FHA, conventional loans. We control who goes out on the appraisal, right? But on VA, they send out whoever the VA wants to send out.
Correct. Yeah.
And the VA appraiser has 2 weeks to from the time they receive the order, not the time I order it, but from the time they receive the order, they have 2 weeks to get it back to me. And so I know appraisers around town, and I'll talk to my appraisers and be like, guys, why do y'all take so long? And they're like, honestly, because we have to. They partner with guys like me on regular mortgage stuff, and they say I have to turn those regular appraisals, conventional FHA. I got to turn those around in like 3 days, 4 days, right?
Yeah.
Nobody can say anything to me about the VA. So if I take 2 weeks and I get it done when I get it done, like it's bottom of the list. I'll get it done, but it's last on the list. I got to do
Sounds like
these
some
other
real
deals.
government employee stuff to me.
Yeah. but that's but at the same time, I've had some VA appraisals come back in 2 days,
Yeah.
and I'm like, whoa, it was like a record. Like what happened?
And they're hard to
And
fight.
so, yeah.
Appraisals, period, are hard to fight, but especially the VA ones, right?
Yeah. The VA picks, it's in Texas, it's ordered out of Houston. So the Houston VA they order and you get who you get. Don't throw a fit. Yeah, basically. So that's.
But it's, I've been in a deal recently where that actually worked to my benefit, where I was in negotiations with an agent and they were swearing up and down that their home was worth X amount of money. And I was like, it's not. I showed them all the data. They were like, no, you don't know how to do your job. I was like, I used to live in this neighborhood. I know exactly what's going on here. It's fine. Long story short, we went through like a battle with this person, and then the VA appraiser came back, and it came back $50,000 under where we were at in our actual contract. And we got to the point where we're like, we're going to walk away from this because you guys aren't going to be able to fund. It's not correct program for my client right now, and we're not going to come to the table with more money. Anyways, we ended up canceling contract. The guy came back 2 days later after we canceled contract to try to get us back under contract at the actual appraisal amount that we had. So we would have got like an extra almost 60 grand off of what we originally asked for the price. But we decided on a different route.
We moved on already.
We moved on. Yeah.
They'd already kind of burned that
And
bridge.
sometimes agent to agent stuff really matters. And
Yeah, it does.
It was not a very happy experience for myself, my clients, nor that agent who could not sell that property.
Appraisals are like a safety net. That's what I always tell my buyers.
Yeah.
When they're like, well, but is it really worth that much? And I said, look, if you're feeling that we're just like maybe a little over, the appraisal is going to bring you back where you need to be. Like
it's a new talking point, right?
Yeah, and it's a next opportunity to negotiate.
Yeah.
But
because realistically, you as a consumer, you're like, hey, in our market anyways, if this house is not worth what I'm trying to purchase it for, then why would I say that's a safe investment?
Right. And on an FHA loan, it has to appraise for the sales price, right?
Well, on all of them, it depends on the loan to value and all that kind of stuff. You always have an option the buyer always has the option, if they wanted to, pay extra, so cover the difference,
Right.
if they so choose. But at the same time, like your client, if it didn't make value, it's either drop the price,
Yep.
the buyer brings extra cash, or walk away from the deal if we
Mhm.
can't, find the happy medium or whatever it is.
Yeah.
So,
Yeah.
but that's FHA, VA, and conventional too. So,
Gotcha.
Are you seeing a
Um,
lot of appraisal waivers in this kind of market right now?
so there's two different kinds of appraisal waivers.
Mm-hmm.
The kinds that I say that is the realtor side. When you guys are checking the box, it says we waive the right to do the appraisal or cancel because of the appraisal. That's one thing.
Mm-hmm.
Now, the appraisal waiver on the lender side is when I run it through the computer and the computer says, we don't need to do an appraisal.
So it's like
Um,
a desktop kind of a
it's a
appraisal.
desktop,
Okay.
yeah. And so we plug in a value, and it's literally as easy as the computer saying, I'm good with that value. That's basically it.
Mhm.
And we never know until we plug it in.
Yeah.
And it's always address specific. You got to have everything in there from income, assets, all the stuff, credit, et cetera. And it's a complete picture, not just the property itself.
So it's the actual client that you're bringing to the table, their whole
Exactly, yeah.
profile overview.
Whole profile. Because I've run some before where I'm like, I don't want to mess with. They might have a 401k, and I'm like,
Mhm.
they don't need it. We're not. It's not like they're using it for down payment, and I'll leave it off. But they almost don't have any extra money. But then I go back in and add that $300,000 401k, and then I get an appraisal waiver, and I'm like, that was it. That was the trick. And you don't know. It's almost like guess and check on some of that stuff. But that's what the computer program just liked, having more assets.
Yeah. How many times until it cuts you off, though?
So
how many times can we resubmit on this little magic program of
so
yours?
probably about in 2007, I was in my 20s at the time. I ran the computer program, DULP, desktop underwriter, Fannie Mae stuff. Probably ran it like 50, 60 times on a loan. And finally, because I was like, I'm going to figure out how to make it say yes.
You're just
right?
looking for that magic combination of answers.
And it's not a good thing. Don't do that. Because the underwriter came to me and said, Cody, don't do that again. We can't we can't close the loan if you do it like that, because
there is history tracking some.
they track the number of times you run it, and when you run it
Now you're
56
flagged.
times, that's a red flag. You're not going to get that loan. We can't approve that loan. And so I was like, oh, good to know. And I learned that very early on in my career. But you figure out where the line in the sand is, and sometimes it is, in my opinion, arbitrary sometimes on where, like 56.9 is the line in the sand on FHA. Fine, whatever. So be it. That's the line. We will go right up to the line, and that's your max approval. So I didn't set the rules. I just know where the line is.
Yeah,
we got to follow them.
So,
but like you mentioned earlier, it's almost like a long-term relationship that you're trying to develop with these clients. Sometimes they're not equipped to buy right now.
Yeah.
But we can project here in the next 6 months, a year, based on their finances and the game plan that you have put forth to get them across that line.
Yeah, some clients, again, same. I'm talking about conversations I just have today, and a nice younger couple, but it's like, oh, we make $100,000. I'm like, oh, that's great, but their credit's in the 500s, and so we start talking about some of their credit cards. I'm like, they only had like $1,500 in credit card debt. I'm like, oh, that's not too bad, and then over 5 credit cards that each have a $300 limit. I'm like, so you owe $300 on 5 different credit cards, and their limit is $300. They're all maxed out, right? And I'm like, okay, we're gonna fix this. And I'm
how
like,
silly is that, right?
Well, but they didn't know, and they're just like, we don't know. We're just like they're paying the bare minimum, $30 a month, which like all you're doing is paying the interest, and so your credit scores stay low, and you're paying 29% interest, and the credit card companies are just like, yeah, just pay them,
let it ride.
Let it ride, yeah, pay the minimum. I'm like, all right, we're paying them all off. Don't close them. And so very specific, instructions like do not close anything, pay them all off to zero. Let's set up automatic payment for your cell phone's going to go on one, Netflix is going to go on the other. Very specific things go on each credit card to keep the balance only one charge, so it stays active, right? And then we set up auto pay so that they're paying the balance off in full every month. So at that point, it costs them zero interest, and then they're starting to build that history of on-time payments every month, keeping the balance low. The balance hopefully is only $50 or whatever. If it's only one person on a cell phone bill or whatever it is, or
well, I don't know what cell phone's $50,
what
but
cell phone
I was
like, what year is this again?
Yeah, I know.
Right.
So $100, whatever it is. But Netflix, $25 or whatever it is now. So
Yeah.
That sounds about right with inflation.
yeah. So, but little things, right? And so just saying, okay, this is gonna be the timeline. It could be a couple days, could be a couple weeks, it could be 6 months. Depends on what they have going on. But yeah, like every day we're helping clients fix credit, or just even somebody that might have a 640 credit score. I'm like, hey, you're approved, but I can get you a better interest rate if we do this, this, and this. Again, young girl closing tomorrow, and she was in the 600s, got her score all the way up to 720, and got her about a 0.25% lower interest rate and she had the money to pay all the credit cards. So I was like, what are we doing? Like, we got to pay these credit cards. Like, it's, in my mind.
Yeah, well, a lot of us just are not well educated when it comes to finances.
Yeah.
And that's why it's so important, I think, to connect with lenders or just us as realtors to really bridge that introduction to so many different resources that we might have, right? I mean, I can tell you just so many people I've sent to you or other people that they were not ready yet, and we had to get them on a whole educational platform to understand where they're at right now and what their goals are for the future together, to make sure that they can achieve that. Because it's not fun being in the 500s.
Yeah.
Well, to me, it's really not a matter of if you're approved. It's a matter of when you're approved, right? And that's the key. Like, everybody's gonna be approved at some point. So we just have to get them. Like, what does that plan look like? Is it a plan for a month, a year, multiple years? I mean, the only time it's really tough is if somebody's like truly just, and there's people in this category that just are struggling just to get by day in, day out. Like, it's tough when you're just not making any money, or they're out of a job or something like that. That's going to be about the only time. If we don't have a job and we don't have any money, there's only so much you can do at that point. But if somebody has a job, I can fix pretty much anything as far as a plan to make the money you're making, save the money here, pay these debts here, open up a trade line here, or a credit card, or whatever it is. Let's improve credit here. Like, you can do this.
And collections too. People think, oh, I'll just pay it off. And what I've learned is like, no, do not pay it off, right? So tell us a little bit more about that.
Well, it depends on the collection. So if somebody is in that position, so usually at that point, like, we're definitely like saying, hey, let's go ahead and let's pull credit. Let's have a detailed plan. I can't have a very detailed plan of action unless I do pull credit and really dive into kind of the weeds.
Now, that's not a soft pull at that point.
Yeah. So at that point, I'd probably just say, we could do a softball actually.
Okay.
But we just can't do a full underwriting approval with the soft pull.
Okay.
So if we're like trying to make offers on a house, I'd be like, yeah, let's do a regular pull.
Sure.
But if we're just doing credit plan, I would do a soft pull and we'd be fine. So, and the difference, just so everybody kind of understands, like, the hard pull is going to have about a 4-point impact. 3 to 5 points is what I tell everybody, impact on your credit score. So not the end of the world if you do a hard pull, but it still counts as an inquiry on your credit. So whereas a soft pull just won't even show up. But it does give us a full look at everything on credit, so balances and you name it. So a lot of times people are just like, can you see my bank account on there? I'm like, no, I can't. I cannot see your bank accounts or anything on credit. Like, it's just,
I don't know what you bought on Amazon when you had too
I
many margaritas.
have no idea. Yeah, so like, it's just purely things
Can you
on credit.
see my chat GPT history on there?
Yeah, I was like, car loans, student loans, credit cards, like, just things on credit. So I can't see your electric bill or any of that stuff. So
yeah, but collections. So you're saying they're different kinds of.
Yeah, so it depends on the date. So if it was just updated, or if it was relatively recent, I might say, hey, you know what? We're trying to buy a house next month. Let's go ahead. We need to pay it. And we have software programs we can run the credit through, and the software program might say, hey, pay this and you'll get 20 points and we're fine.
Oh, it can project the
New
increase
scores,
in the credit.
yeah.
Okay, very cool.
And so depending on the dollar amounts too, we might not care about the collections. Sometimes we can have collections on there if the scores are high enough. It depends on what the total dollar amount is, but we might be able to get away with hitting them for a 5% payment on whatever the overall collection amount is. Add that to the debt to income ratio, and I'm like, you're still approved anyways. Leave the collection. I don't care.
Okay.
And it's purely just those are in the guidelines for the type of loan program we're doing. And I'm like, oh, let's just add a monthly payment, and they don't have to pay the monthly payment. I'm adding in the loan file in the calculation in the debt to income, and I'm like, you're still approved. Skip it, ignore it, move on. Between you and the wall, I don't care if you ever pay it. So
yeah.
Yeah.
So correct me if I'm wrong. I thought that if you pay it, you're essentially admitting fault, and it's staying on your record versus if you fight it and you can say, I'll pay you 80% of what I owe you, but you have to
You
take
can
it off my
negotiate it.
credit. And then you negotiate it, and then it
Mhm.
just kind of goes away.
So in deals like that, I would encourage people to get a deletion letter. And
Yeah.
so as opposed to a zero balance letter.
Gotcha.
So there's two different ways because you can have the collection on there. I can update it to show a zero balance, and that might get us a couple points,
But it's
but
still
if
staying on there.
but it's still on there. But if we can get a deletion letter, then I can get the whole thing removed as if it never existed.
So you remove it or the collector removes it?
Well, we get a letter, and then I submit it to the credit bureaus to remove it.
Oh, okay.
So yeah.
How long does that process take?
So when I do it, it only takes a couple days. I'm
Okay.
talking 3 days. When a consumer does it and they submit it to the credit bureaus, you're talking 45 days
Oh,
or
wow.
something like that. So,
All right. Who
Yeah.
you buying some
Okay.
coffee and cookies for?
well, no, we pay money to the credit people, the credit company to do all that stuff. Yeah. So it's
So you have
it's
a
definitely
person
a thing. Yeah.
that knows a
Okay.
person.
Yeah. But kind of the other part of what you're asking about the collection, sometimes I might look at the collection and say that is from 6 years ago, and they have not updated it on your credit report for like the last 4 years.
Mm-hmm.
Like, please don't touch that, because as soon as you touch it, it'll bring it current as
Mhm.
if,
Reactivating it.
yeah, exactly, as like a more current history,
Okay.
a more current negative history,
Mhm.
and then it might actually drop your scores.
Mm-hmm.
So I've had people go, be like, oh no, I just went and paid this, this, and this, and you're like, oh my gosh, I wish you hadn't
Yeah.
brought those things up because they
Mhm.
were so old. Anything that's like once you have a negative credit, like a late payment, a collection, or anything, whatever's in the most recent 12 months has the most impact on your scores.
Mm.
And then you go back 24 months, next kind of tier of impact, and then 36
They
months,
just
et
kind of
cetera,
fizzle
right?
away a little bit.
Yeah, like the further back in time you go, like the
Uh-huh.
less, like 5 years ago,
Mhm.
who cares, right? So if that collection was last updated 5 years ago, and then it all of a sudden gets brought
Mhm.
current and like updated again as a negative, the negative has a greater impact on the credit scores at that
Mhm.
point than just leaving it being 5 years old and letting it sit. I'd rather just let it sit.
Yeah.
Right.
So
Gotcha.
it weighs more heavy on the algorithm essentially.
Yeah.
The more
Okay.
recent it is.
And
Yeah.
so, but it's very case by case specific per client. So,
Yeah. Yeah. The whole
Yeah.
paying things off
Oh, yeah.
is just such a fine balance. So, for example, the client that you helped me close a couple of months ago that had recently purchased a new Porsche.
Oh, yes. Yeah, I do remember that. Yeah.
And it's like, do you pay the car off? And, so you worked some magic. And at the end
Mhm.
of the day, the car got paid off and the
Yeah.
loan
Were you
got-
gifted the Porsche?
No, I did. I did not get
Right?
the. I did not get the Porsche. So she got to keep that.
Yeah.
And which she deserved it. She earned it. So.
Mhm.
Yeah, but
Um,
she had interesting income too because she was part cash, part W-2, and she
Yeah.
had money in the mattress, and
Yeah.
she had a
all kinds of
car,
problem
and
solving on that one. Yeah.
yes,
But there's always a way. I mean, well, she had the ability, and it was we were basically just solving a debt to income problem.
Mhm.
Mhm.
And I was like, if we do, because she wanted to do more money down for the down payment, and it was like, no, let's do less money down and reallocate that
Mhm.
same money over here, and we paid off the car instead.
Mhm.
And instead of having a big car payment, it was a bigger loan amount, so the same overall debt, right? So you still owe the same amount of debt no matter what,
Mhm.
right?
Yeah.
But your monthly payment, your monthly outflows was like $1,000 cheaper a month or something to just get rid of the car.
Probably is like an interest
And-
rate thing as well. Like
Yeah.
Well,
so-
also you don't write off an interest rate on a car, but you
That's
write off an
true.
interest rate on a home.
Yes,
So
exactly.
now
true.
there's a write-off
Yes,
alongside that, right?
Exactly.
Yeah,
So
it's genius. VA loans,
Uh-huh.
right? You can get pretty creative writing off debt as part of that
Yes.
loan. Is that correct?
So and I'm not sure, are you talking about like where the seller gets to pay off the debt?
I don't know. You tell us.
That's
Re-educate
I was
us.
gonna say
Tell
that's
us
one
some
thing.
stories,
Re-educate
yeah.
us. Yeah.
I can't tell you how many problems I've solved on VA stuff.
I
this
hear
way.
that
VA is
VA
the
loan
best.
is one of
It's
a
your
lot
biggest
of people's
passion, right?
Oh, it's the
favorites.
best. Yeah.
Yeah.
It's the most flexible on all the stuff. So I've gotten, we can have a seller credit. Like
Mhm.
literally, I've had people pay off their credit card debt with seller credits money, and I'm like, no, we're going to do it this way, type of thing. As long as everybody's open to receiving like the game plan. I'm like,
Mhm.
don't do this money down over here, over there. Like, no, let's do this money here. But yeah, on VA, you're allowed to pay off debts. I've had people pay off the IRS, like credit cards, car loans, stuff like that.
Yeah.
And it was the seller paying for it. Now, the home did have to appraise for
Mhm.
whatever, we were.
That was my next question.
Yeah,
Yeah.
that was it.
Yeah.
So the VA does want to make sure the home's worth
Of
whatever
course.
you're buying it for. So, but as long as it appraises, and yeah, you can use whatever you want on that seller
So we're
credit
going to
line.
bury the negative equity into the
It-
actual
It's
property.
essentially debt consolidation.
It really is at the end
Yeah.
of the day. And I'll come back to the veteran and say, hey, look, you're paying 10%, 20%, whatever the debt is,
Probably 30%.
30%, yeah, 29%, whatever the max allowable is on the
Mhm.
some of the credit cards or whatever it is. And I'm like, you're going to get a 5 point something interest rate that is tax deductible. So it's kind of like borrowing money at 4% with no tax break, right?
Mm-hmm.
Or 3.7 or whatever tax bracket they're in, because you're getting
Mhm.
to write off 20 to 30% of the interest on your tax returns, right? And so I'm like, this is the way I would do it. If you're open to having that advice, mathematically less money will leave your bank account if you do it this way.
Mm-hmm.
So, and that at the end of the day is like the easiest way to have the conversation. I want you to give away as little money as possible to whoever you're giving it to.
Mm-hmm.
The mortgage, the car, the credit cards, whoever it is. Give away as little as money as possible, and then just keep the rest in your bank or go invest it or do something smarter than give it away. It's kind of where I'm at with it
Yeah.
always. So, yeah.
But like you said, you're just kind of building plans and finding out solutions for every different loan type out there.
That's really it. Yeah.
Yeah.
So, but like I said, VA is hands down the most flexible on debt to income ratios. Even I don't know, and I didn't know if you're going with this direction as well, but like sometimes you can ignore the spouse's debt, so you can have like the veteran on the loan, and the spouse might not be on the loan. In Texas, because we're a community property state, you do have to include the debt.
The deed, right? They still have to be on
Well,
the
they're going to be on the
and all
deed, but
things.
you still have to include the debt of the spouse in the debt to income ratio. But if the spouse is working, you can use the spouse's income, who's not on the loan, to offset the debt that is on the loan. And so it kind of cancels out solving that problem as well.
Yeah.
And so I can't tell you how many people are like, they just, lenders don't really understand or know all the rules and all that stuff.
Yeah, that's an interesting concept too, right? Because then it frees up another like loan opportunity as well for the spouse if that's something in their future what they want to do, right?
Yeah. One of my recent ones that were not American nationals, and at one point they removed the husband from the loan.
Yeah.
And it was just on the wife. And initially there was a little bit of a language barrier and everything. So she's like, well, why are they doing this? I said, trust Jessica that she knows. They're on top of it. Trust me. But they were confused, like, but is he not going to own the house? I go, he's going to own the house.
Gonna be on title.
Just it's all about that, finding that sweet spot and riding that wave to the closing
Mhm.
table. So
yeah. And that's like at the end of the day, that's our goal, is to help the client get what they want, right? And the best deal. And so if it's going to be, I can't tell you how many times I've had the conversation with the spouses where I'm just like, how would you feel if one of you were not on the loan? You're both going to be on title.
How would you feel if you got divorced and came
Yeah.
back? No, just kidding.
No. But and I've had people like propose divorces. I'm like, no, we're not getting divorced. Not going to let you guys get divorced to buy this house, because like
Wow.
they're like, I'm explaining the rules and they're like, we'll get divorced. I'm like, no, I'm not doing that.
I've had people who are like, we're gonna actually speed up getting married. I'm like, okay.
I've had people do that too, and they're just like, we'll
Yes.
go get married tomorrow. And I'm like, yeah, fine, whatever you want. I'm not. You do whatever you want to do. Like but
whatever your goals are here, I'm here for it.
Yeah.
But yeah, the goal, and I've had people like where I'm just like, one spouse is like amazing, 800 credit scores, and the other one's like 620. I'm like, it's gonna be about $300 difference. How would you feel about just being on the loan by yourself? And they're like, it's fine. I was like, I'll fix you later. It's just gonna take like 12 months. I'll put you back on the loan like whenever rates come back down again.
Yes.
So,
I mean, at that point, you got to decide what a piece of paper means.
Well, it's once you refinance, then you can kind of rewrap them back.
And occasionally I've had the occasional couple be like, no, it's worth it. I want my spouse to have the mortgage history on there. I'll pay an extra $100 a month, or as long as it's nothing like crazy big.
Yeah.
They're like, I'll take the tiny bit higher interest rate just to have us both on there. It's fine, and we just keep on moving. So, but yeah, and I'm just like, rates will come back down. I don't know if it's going to be next month, next year, but.
So at what point do you think it's worth refinancing? How much does the rate need to drop from what you currently locked in on your mortgage to be worth?
It really depends on the loan amount. So like the bigger the loan, the smaller the drop needs to be in the rate, right? And so if it's
if we're going with like 450,
200
your
to 600 or somewhere in that kind of range, I'd probably tell you like 1% is kind of the matching number. Yeah.
Okay.
That's typically the number you'll hear for most, average people thinking about it.
Mhm.
Once you start getting up in, $6, 7, 8, $100,000 loans, I'm like, maybe 0.7, 0.6, that might be doable.
Mm-hmm.
So it's going to depend on what the actual costs associated with doing the refinance are.
Mhm.
And so, like when we do our refinances, we waive all the lender fees. If it's like our past client,
Right.
we waive all the lender fees and cover the appraisal fee, and basically trying to get the cost down to like as small as possible. Yeah. And so that way, if you're only saving 0.5%, but it costs you nothing, well, then that's a free refinance. Then
Mm-hmm.
yeah, that's no brainer. We do it. The only true expense is the time you had to spend to shuffle the paperwork
Mhm.
and sign everything, and
Yeah.
the annoyance, like PETA factor, basically. So,
Right? You
but
want the money or not?
yeah, and
Right.
that's really what it comes down to. And then sometimes I'll say, hey, look, we can do it, and you'll save a full 1%, but it's going to cost this, or we can save 0.625%, and it'll cost you nothing.
Mm-hmm.
And so you kind of do the math. You're like, hey, it's going to, you'll save 1% on a $400,000 loan. Back of the napkin numbers, you save $4,000 in a year, right? But it's going to cost you $6,000 to do it. So it's a year and a half to break even on that.
Yeah.
Mm-hmm.
Or we can only save, $3,000 or 2,500, but it costs you nothing. So your payback is immediate. And it depends on where you think rates might be going next year, the year after, et cetera. If we really think rates are going to keep dropping, we refi again in 2 years,
Right.
as long as it costs nothing. So
Yeah.
So you don't always need to have a low rate to refi, right? Because what if you've paid off 20%? Could it be PMI? Could it be to get more out of the loan?
if you wanted to pull cash out, yeah, you could. You can always pull cash out. In Texas, the most you're going to be able to borrow is 80% of. I think most
Aside
every
from
state's
VA,
actually
right?
changed that now. Yeah. But you can't do a VA cash out in Texas. So
Okay.
you can in some other states. So I always tell everybody there's rules for 49 states, and then there's rules for Texas. Like they literally, like if you go to like the guidelines for Chase or whoever, like some of the investors that buy the loans, um, when we shop all the loans around, they have cash out refinance rules and then Texas cash out refinance, separate chapter. And you have to go read all the guidelines and rule book stuff just for Texas.
So is Texas more stringent?
Yes.
Okay.
Yeah.
Interesting. Well, I knew that we were pretty strict just in terms of like the real estate world as well. I know that we're one of the strictest based on our own educational standpoint, but I didn't realize that we were the strictest in regards to the finances as well.
Yes, absolutely.
Okay.
So I was talking to somebody else today about an investment property, and I was like, you can do a HELOC or a line of credit or, on an investment property in other states. But in Texas, a lot of the lenders are scared to do HELOCs on investment properties.
Right.
And so, like, I've been searching far and wide. And I have other lenders that I was like, oh, I talked to one of my lender friends. I was like, oh, I want to do it in Colorado. And like, totally fine. And I was like, what about my Texas property? And he's like, oh, no, we
It's not
can't
your
do it there.
primary.
Yeah,
You
yeah.
can't.
So
You don't do HELOCs?
so technically I can do HELOCs. I can't remember if I've ever talked to you guys about this or not, but I can do HELOCs, but I don't like doing the HELOCs personally because I don't have the best rate on the HELOC. Now
Okay.
that's just a me and my company kind of product. So a lot of times I just refer them to, I have friends in the banking world that work at, banks, basically traditional checking and savings.
Yeah.
And I'm like, just go over here. Like they're going to have a lower interest rate than me, and their costs are going to be lower. Like just get it over here. Like this is where I did my personal HELOC is over here. So just call these people. They'll go do a job for you, basically.
Yeah.
So.
Yeah. That's what you did with me. So I thought that you
Oh,
don't
okay,
write
yeah.
HELOCs.
Okay, no. I was like, technically I can't. So if somebody was like they didn't have another option,
Sure.
like I could do it, but I'd much rather get them a better deal, and like this is gonna be like in your best interest over here.
Right.
Vice versa, like I'm not going to send them to that bank because that bank's not like if they're buying a house, I've got the best deal.
Right.
I've got the best turn times. I've got the best process and service and speed and rates and fees and all that stuff because I can control everything. But on the HELOC, I don't.
Yeah.
So. But I'll be the first one to tell you though. So.
Yeah.
I mean, we all have our pros and cons. We have different types of clients that we refer out because we just can't deal with that type of properties, right?
You can't be
yeah.
everything to everybody,
No.
Yeah.
and be the best at everything, and yeah. So
Yes.
Yeah, but I do appreciate that because you do. I mean, in the past, you've offered to me. I know there was a client, and they were very particular. They wanted to use their own lender, some relationship-based choice,
mhm.
and you still said, "Run the docs by me. I'll still read them, even though I'm not making money off of you. I'll still be happy to explain it." So
That's my promise to you guys is as well, is like any client of yours, I'm just like, yeah, just I'll float it by me. I'll be like, oh, that's a great deal, or
yeah,
oh my
yeah,
gosh, like don't do that. Like you don't need to be paying points for that kind of rate
yeah.
or whatever it is. And
Hmm.
I mean, I've
so
come to you with credit card choices. Hey, Cody, I'm thinking
yeah,
about opening a
yeah.
credit card for Kyle M because I fly a lot. Is this a good one? And then
but
I told my husband, said, Cody said we're
but
good.
I'm happy to geek out on stuff like that. So that's where I like talking to clients about, and I really do. I get calls from like my past clients as well, like asking about like buying something on credit or spending this, or can I open this trade line? I'm just like, you've bought the house, like you don't have to ask me for permission,
Yeah,
but I'm happy to chat with you on
yeah, yeah, yeah,
like the
yeah.
game plan and do all this stuff. So
But you're gonna be everyone's big daddy, Cody. You're 5.
yeah,
Yeah.
but it's more just kind of talking through the advice and all this stuff.
Well,
So
I mean,
Yeah.
they obviously value your opinion. You're an expert in your field.
yeah,
Similar to us, they call us first if they need help with anything real estate related, even though
mhm,
that we may not be real estate attorneys. And like, you got to go to an actual attorney for that.
Yeah.
yeah,
Or commercial agents by trade.
mhm,
We definitely have people that we connect with in our world that we can plug that in for them.
Yeah.
Yeah.
yeah. And I mean, usually the next phase, like once we've kind of helped the clients get their first house or the second house or whatever it is, wherever they're living, it's usually the next conversation. A lot of times is either um, uh, I always like talking about like what are we dreaming about? Like, uh, uh, are we lake people? Are we mountain people? Are
Yeah.
we beach
Okay.
people? Right? Do we want to own rental property? Like, is that like a bigger picture uh, plan? Is that on the visions? Because I'll talk to some people and they're like, absolutely not. I don't want to own. I don't want to be a landlord or own rental properties, et
Yeah,
cetera.
yeah,
But
yeah.
then I'll talk to some other people and they're like, actually, yes, I might want to talk about rental properties. And I'm like, perfect. We got the one house. Let's keep
Yeah.
this one. Let's go buy the next house.
Yeah.
Yeah, I've
Um,
had friends tell me, you're the worst realtor. You talk people out of selling a house. And I said, but if it doesn't make sense, if they
yeah,
can
Yes.
live without selling it,
I mean,
let it grow.
especially right now in our current market in the Austin metro area, so many of our clients are having to relocate out of state,
mhm.
and we start looking at the comps and the home, and like, buddy, you had to bring $80,000 to the table in order to close this home. Does it make sense for you?
Yeah.
And at that point, it doesn't, and they're kind of forced into landlordship at that point in time.
Well,
Yeah.
well, one of the other things that a good kind of nugget to remember, and again, had this conversation today with somebody that was debating on selling now or just waiting a year or two, maybe rent it for a year or two and sell
Hmm.
later. The IRS says, hey, as long as you live there for at least 2 years out of the most recent 5,
Hmm.
you can sell it and not pay any capital gains, right? So I'm like, as long as you're a landlord for less than 3 years,
Hmm.
1 year, 2 years, rent it out, 2.5 years, whatever, and then sell it before you hit 3 years and a day,
Uh-huh.
any profit is tax free at that point. So that could be the solution. That might be the market we're in right now, is
Hmm.
because you might just want to rent it out for 1 year or 2 years. And this client actually had a 3% rate, and I was like,
Yeah.
bought refied probably back in 2020
Yeah.
or whenever it
Yeah,
was,
yeah, yeah, yeah.
4 or 5
and
years ago.
yeah, and I was like, your payment's pretty good if it's not like if you're not feeling like you're getting top dollar. They didn't need the money for the down payment on the next
Hmm.
house. I said, rent it for a year, see what you think. If you don't like being a landlord, by all means, sell it if you don't want to deal with
Mm-hmm.
house stuff, whatever. But you're still tax free. And in a year from now, it could be a better market. It could be more competitive if rates are in the fives. I'm telling you, we were in the fives in February, and my phone was ringing, and I was like, this is gonna be the best year in the last like 4 years, right?
Yeah.
And then the whole war thing happened, and rates jumped up to the sixes, and oil shot up to
Yeah.
100 plus whatever it was,
Yes.
and I was like, all right,
It's kind of like
we'll wait
predicting the
for it.
weather, right? You're like,
Yeah,
it looks like it's gonna rain, but then you just never know what
it's gonna
gust is
clear
gonna
up.
come and
Yeah.
It'll
just
clear up. It
yeah,
could be next week. It could
yeah,
be next month. I'm not sure.
I mean, in our world, we always have to be a little bit optimistic, but prepare for the worst,
Yeah,
through education or just resource finding for people. So, like you said, whenever stuff hits the fan, we're like, all right, what's our move now?
yeah,
We're self-employed. We have to go out
right?
there and there's people that had to buy houses, so someone has to help them. Why not us?
Yeah. But I mean, if people are thinking about like the lake house, the beach house, the mountain house, the bigger picture or rental properties, like I always like, once we've kind of already checked that box, like we have a place to live, right? And like all those things are kind of there. Like that's the more fun part of like helping people with like the bigger picture, like the dreams, the bigger vision. Now we're building. Now we're like building wealth. Like we're building, yeah, and we're the team that kind of helps grow the wealth, bigger picture. And you don't need to be buying a house a year or anything like that, but like chipping away, like 5 years will be here before you know it, right? And so like let's start putting the plan together now to do, if that's your dream, the lake house. It could be Lake Buchanan or somewhere nearby, or Canyon Lake or somewhere down south. But I can't tell you how many people I've talked to about that and wasn't even on the radar, but because you're having that conversation, they're like, actually, that does sound pretty good.
Planting those crickets.
Planting those seeds, yeah. And it's worked out great for. I can't tell you how many people have bought that lake house, and then just over time. But the enjoyment factor has been huge, but like the appreciation's like the icing on the cake, right? The value going up over time. So, and that's the big picture stuff that you're trying to. And it takes time, but like after 20 years, I'm just like, oh yeah, I can't tell you how many people I've seen like make just tons of money in like real estate. So that's why I'm just like, it's a no-brainer game for me. Like thousands of clients later, I'm just like, this is the best industry that you could possibly be in. So
we always say we're real estate advisors.
Yeah.
I hate the word salesman, or I don't buy or sell homes.
Yeah.
I advise people on how to make the soundest real estate transaction, and then having somebody like you in our pocket who can then kind of do it from the back end and the financial, it just really ties everything with a nice pretty bow and a package, and for like long-term planning. And if today's not the day, 6 months it will be. And that's when clients come back, just, you don't have commission breath. We don't have commission breath. And I've actually had my clients tell me, they're like, what sometimes panic sets in, right? First time home buyers, young, nervous, oh, it's going to be more than renting. And then they're like, Cody, he's like Xanax.
You are very
because
common.
when they panic, you're like, it's okay.
We got this.
Don't worry about it. We got this. Yeah. So.
Well, after hanging out with Mo so long, you might need a Xanax. She's so high energy. No, I'm just kidding. We're both the same way. We're both pretty much hype people for our people. But I think we're all at the same conclusion of this. Like, we're helping our clients identify and realize that they can have dreams, and we can help build it in different ways by building a team around them. A team of true advisors, honestly. From start to finish. And for us, our goal is always to have our clients come back to us and let us help them in whatever that next venture is for themselves, right? Whether or not be this house that they're buying today, or the one that's 5 years from now or 10 years from now, and what that might mean for them and their families, and how to grow their wealth over time. Yeah.
And I can't tell you how many people I've helped. I do start to feel old when I've helped the family buy the house, and then they're referring me their children. And you're like,
you're not grandchildren yet?
Yeah, I'm like, oh, the kids are buying houses, all right. So I'm like, all right, let's help the kids too. So
well, I love that you're like so connected to your clients. We're very connected with our clients as well. We've done baby showers for clients.
Gone to their weddings.
Yeah, weddings across the country.
Weddings and stuff like that. Yeah, y'all are good.
Yeah, I did a vow renewal like 2 years ago, a year ago, something like that, and we had clients that flew out to Mexico for my vow renewal. So like it was it's full circle moments for us, honestly.
Yeah, we really build long lasting relationships.
Yeah, I was gonna say, but I mean that's the best part. You get to hang out with like your friends, and
you got to build that trust, that relationship, and they become your family.
Or our vendors, like we like hanging out.
I don't know. I see you more as a friend than a vendor.
Well,
I'm good times.
It transitioned, for sure.
It transitioned, yes. And we like your wife, so
She is absolutely the best part of the package deal with me that anybody could possibly get. So yeah, she's definitely my better half. So.
Yes.
You have a really nice operation going, because everybody it's like a family business.
Yeah. Oh, the team around me in the office. I mean, I've been working with the majority of the people have been there, honestly, like 8, 10. I mean, Kylie's been with me. Like, her and I were doing loans back in 2007 together. We're in cubicles next to each other. Like,
Yeah.
I was like reading guidelines and calling people on out of the one ads, or not the one ads, but the out of the newspaper though, but for
Yeah,
sale by
yeah, yeah.
owners.
Okay, they're for
And
sale
Yeah, yeah,
owners. Okay.
literally when people had everything in the newspaper, and that's how I was talking to people.
Yeah.
Nobody even does the newspaper anymore, but
Do
No.
they even have newspapers?
yeah, I was like
No.
like when I see a newspaper, I'm like, oh.
Them
I
classifieds.
remember
Yes.
this thing.
So, but yeah, the people in my office and team, like it's been years and years. Like it so it truly is a family on all this stuff. So, yeah, and you can feel that too when you're talking to them on the phone. Like there's
You can.
like it's a solid team and system. Like I can't tell you how many people, they already know what I'm thinking before in the office. So like I don't even have to.
Yeah, I mean that's the beauty when you start creating these relationships with your team or the people that you keep around you, or your vendors as well. Like they start anticipating your every need. So whenever you set up an appointment, they already know exactly, hey, Val has this going on. This is exactly what he's going to ask for. So they just know automatically,
Mm-hmm.
and that's just built over time with trust and understanding.
Yeah.
Yeah, but that's great that you have that on your inner circle of where you operate and where you bring your clients to.
Yeah,
that's pretty special.
Yeah, love taking care of the clients, and the team does a really good job taking care of the clients. So myself, I like to say they're an extension of me. So, just because occasionally I might be doing a filming a video recording or something like this and not taking a phone call. So that's where like the team is like on standby, like phone ready to go.
Yeah. How much anxiety do you have not answering phone calls?
I try and let it go. It's taken me years of kind of just being like, I'll call everybody back. Like you'll hear my voicemail if you ever call me. You'll hear my voicemail is new every day. So like
that's impressive.
It's new every day. You said a new voicemail every day.
Yeah,
it says
you don't
it's
call me
Friday.
enough. Yeah.
This day. Yes, every day.
I am a caller. That's funny. I don't call you every day. Yeah. But,
no, it's because he answers.
Oh yeah.
That's probably why. If you call me, I'm going to answer.
Yeah. I was like,
I
really haven't got your voicemail very often.
Yeah.
I'm more like a texter first.
Yeah.
But I do actually appreciate phone calls because we're always in the car.
Yeah.
Yeah. We laugh that we pretty much live in our vehicles.
That's what I was gonna say. Like I'm usually on the go as well, so that's why I have to call. Like sometimes I'm like, I'm sorry, I can't text back because I'm like driving somewhere or something. So
yeah.
But yeah, like call me, and I always tell everybody like, please leave. Like first thing is like, please leave a voicemail so I know who to call back. But
so I just have. I'm gonna go back to your voicemail situation because I find that fascinating. Like, what prompted this? How long have you been doing it for, and why?
A long time. One, just because everybody. Well, if you're gonna call me, you're gonna get I look at it as like a professional. So like if you were to listen to my voicemail right now, it says it's Cody Reid with Pilgrim Mortgage. It's Monday, the 29th of June. So like they know exactly what day it is. So they're not just like getting my standard whatever. It also gives people a perception that I will actually call you back, right? If it's the 29th of June, it's not a voicemail from last year that I recorded, right?
You're
it's
in
the
your
one I
inbox
recorded
every
this
day.
morning. So I'm checking my voicemail every day, all day, and it says I will be returning phone calls between 3 o'clock and 5 o'clock. So please still leave that voicemail. I promise I'll call you back. But if I'm too slow, here's the number for the office. Ask to speak with Jessica, Rachel, or Amanda. Like clear instructions, and then I give them the phone number.
Is this your morning? Have a coffee, record a voicemail.
This is my morning. Yeah,
routine.
This is like before anybody is possibly awake to call me. I'm recording this before kids are up, before anybody's up. Yeah,
that's fascinating.
Yeah,
I don't know. My morning routines is like I'm up and I start doing checklist automatically on my notes, and
but it's part of your checklist.
Reviewing all the things, right? Yeah, exactly. Your checklist.
Part of
But it's
step one.
60 seconds part of your checklist. So that's the easiest thing.
I might have to steal this from you. I'm not too sure, but
no, I do love that.
We'll see how much commitment I have to that.
Yeah, I know, because if you fall off, then it's like you haven't updated your voicemail in 3 days or 3 weeks.
Yeah.
There is the occasional like I'll record it like today, and then if I'm like tomorrow like going on vacation or something. Like,
I'm just gonna start saying if you can't get a hold of me, call Cody Reid.
that's
He'll answer his voicemail and send me a flare.
I'll give you the rundown of like everything's going on.
Exactly.
Well, you've been such a great supporter of us and helping our business grow. Time for you to tell us a little bit about yourself. Do a shameless plug. Tell us about Pilgrim Mortgage and why should people come to you.
How do people get a hold of you?
Okay, so well, the easiest way is just call me direct. That's why I always tell everybody, like, just call me. Don't think about it. Like, don't be like, is it okay? Or text me, like, or send me an email. Like, just call me. Like, I'm on the phone literally all day, every day, and just 512-689-1455. Call me direct anytime.
Okay.
First and foremost, like, don't think about like, oh, it's 5:15. Oh my gosh, I'm probably like still like hammering out emails or phone
Yeah.
calls or whatever it is. Like,
You better
just
be
call me.
careful. We deal with a lot of international clients, so they'll be
Mm.
calling you at like 11 p.m. Yeah.
Oh, I'd rather you call me earlier in the morning. I'm more of an early, like 11 p.m. I'm probably actually out by then.
Yeah, you responded to my text like early in
Yeah,
the
yeah. I was gonna
morning.
say,
I'm like,
like, I'm
oh
usually
man.
more of
Yeah,
a
like a
early morning riser. Well,
Mhm.
and I hate saying that because I kind of like geek out on like stock stuff and
Mhm.
like finance market stuff. So I'm usually up early in the morning. Like, if you want to know what I stress about, it's more like, all right, what's going on in the market? Which way is, like, stocks
The
are up,
stocks.
bonds are up, down, where are rates going, where are the currency's going, gold's up, down, all that kind of stuff
Yeah.
before I even start thinking about mortgage, like, every day. So, like, I'm big on any of the finance stuff
Okay.
anyways. So that's my time in the morning to checklist everything portfolio wise and all that, figure out where's the market going today. And then I'll get into like my checklist. All right, who do I need to call back? Like, who's record, change a voicemail, do
Sure.
some emails, all that kind of stuff. So
Yeah.
yeah, that's my morning stuff.
All right.
But
So the best way to reach you is on your phone.
best way to reach me on my
Yeah.
phone. I'm trying to think, like, shameless plug for me. Like, why would anybody call me? I don't know. I like to think I'm nice. It's not so scary to have a conversation with me. It's not like we get on the phone and I have to like get your social and pull credit and
Yeah.
like I'm about as nice as you get as far as like advising and like, yes, there's a plan, or if you have no job or no income or no credit or any, don't worry, like, we'll talk, we'll have a good chat. I'll give you some pointers in the right direction. Or if you got a great plan already and like, oh, you're squared away, like, I'm going to be the first one to tell you, like, you're amazing. Like, buy any house you want. Like, let's go reverse engineer on what you actually want though.
Mm-hmm.
And so I don't know. I'd like to think I've got nice personality vibes to bring to the table. Definitely gonna be chill. Hopefully, won't put anybody to sleep. Um, but after that, it's really just comes down to knowledge. So I would put my knowledge and experience up against anybody in the country, not even in the city, like in the country.
In the country of Texas,
Yeah,
or
Texas is a country, so yeah. But no, I know guys all over the country, lenders, etc. And so again, I'm right up there with the best. It's totally biased on my opinion of that, but I can hang with anybody on any conversation, anything finance, anything mortgage. Yeah.
Well, thank you for joining us for another little episode with the AdAstra team and our wizard, Cody Reid of Pilgrim Mortgage. You know where you can get a hold of us. The AdAstra team and Pilgrim information will be listed below. And we will see y'all next time. Have a good one.